In this video, we're going to talk about two beast small cap stocks that are exploding higher just after they reported their Q3 2025 earnings. These are stocks that I don't see anyone else talking about. No one is covering these stocks. When I looked at the notable stocks that were reporting this week, neither of these two companies were on this list, but I knew they were reporting because I personally hold both of these stocks. And actually, I'm going to talk about a third bonus stock at the end of the video. I'm not going to talk about it nearly as in depth, but I am going to talk about one more stock. So it'll actually be three total small cap stocks. The two main that we're going to talk about, one has a $1.67 billion market cap, so sub 2 billion, and then one has just above 2 billion at a $2.33 billion market cap. And even though these are both small cap stocks and they're both doing very well after earnings, they're very different types of stocks. They're definitely in different industries, and their growth rates and their growth profile is very, very different from one another as well, which is interesting. You can succeed with a stock that is more of a value-oriented stock, and you can succeed with a stock that's more of a growth-oriented stock. We're going to see one of each of those, and they're both small cap stocks in this video here today. I'm super excited to get into today's video, but first, if you're not subscribed to the channel already, go ahead and click that subscribe button. We're getting really close to the 10,000 subscriber mark. That's a huge milestone. If you can hit that subscribe button to help us get to that goal, that would mean a ton to me. All right, thank you for doing that. Let's jump into the video. The first stock we're talking about here, this has a market cap of 1.67 billion, and this is Vitl Farms. This is VITL. I've posted a few different videos over the years on Vitl Farm stocks, so you might know how beastly of a small cap stock this is already, but if you don't, you're going to get a glimpse into that today. The stock is up 16% in trading today, up to $37.37. 16% pop in a single day on absolutely amazing earnings. We're going to go into those earnings. The company's business model is basically this. They sell butter, they sell eggs. That's pretty much it, okay? It doesn't get simpler than that. There's nothing difficult to wrap your head around. They sell butter, they sell eggs. They're high quality butter, it's high quality eggs. They can command a premium on those products, okay? That's pretty much the whole business model right there. By the way, even after this huge pop after earnings, the stock is down over the past 1 month. It's just barely up over the past 6 months, up 5%, and year to date, the stock is down as well. I consider this to be a very fairly valued stock right now, and it's the stock I just picked up shares of yesterday because I expected once again that they were going to have an amazing earnings, and even if the stock didn't pop, I wanted to increase my allocation just a little bit more on Vitl Farms. Looking at the Q3 report, Vitl Farms beat on EPS expectations. It was expected that they reported 30 cents per share of EPS. They actually reported 36 cents per share of EPS, which is a 20% beat from what analysts expected. That is 4 out of 4 of the last quarters that they have posted an EPS beat, 4 quarters straight. Actually, it's more than that, but at least 4 quarters straight, which is a hallmark of an absolutely beastly growth stock. Vitl Farms also beat on revenue in the quarter by a little bit less than 4%. They reported $198.94 million of revenue for the quarter, and they raised guidance. So they beat on EPS, they beat on revenue, they raised guidance. That is a triple beat, absolutely amazing quarter. Let's get a little bit more nitty gritty on some of these details. That revenue number they reported of $198.9 million, that's up 37% year over year. Their updated revenue outlook of at least $775 million in fiscal 25. That's an increase of 28% from 2024 levels, and they increased their adjusted EBITDA guidance to at least $115 million for fiscal 25. They added 75 more family farms during the quarter with a network of 575 family farms, and they say here that they remain on track to hit their $1 billion net revenue target by 2027. I love that they have a public revenue target that is a long-term revenue target, and they're tracking that each and every quarter to let investors know, yes, we're executing like we should. Yes, we're firing on all cylinders. Yes, we are able to deliver on what we say we're going to deliver on. Gross margin expanded year over year from 36.9% in Q3 of 2024 to 37.7% in the quarter they just reported. Net income year over year went from 7.4 million to 16.4 million in a 1 year span. That's absolutely amazing. That led to net income of 36 cents per share this quarter in comparison to 16 cents in the year ago period. Adjusted EBITDA also almost doubled from 15.2 million to $27.4 million for Q3 of 2025. In relation to Q3, the Vitl Farms CEO said, "Our third quarter results demonstrate the power of disciplined execution across our business. This values-aligned approach is fueling strong growth as we build momentum heading into Q4 and lay the foundation for long-term success in 2026 and beyond." They're speaking my language when they say long-term success, and when they say power of disciplined execution. That is what I love to hear from a CEO, and it's not just talk. The numbers prove what he's saying. And before we move on to valuation, let's take a quick look at the balance sheet. Cash, cash equivalents, and marketable securities were $145.1 million at the end of the quarter. And once again, they had no outstanding debt. That is a perfect balance sheet from such a small cap company. That's a very impressive cash load as well for a $1.67 billion market cap to have $145 million in cash. Love to see that. Great balance sheet. I'm 0% worried about this company in any type of financial downturn, economic downturn, etc. I lied. One more thing before we check out valuation. Margin expansion is going very, very well for this company. Not only are they growing like crazy, but they're also expanding margins while they're doing it. A year ago, their net income margin was 5.1%. That expanded all the way to 8.3% in the quarter they just reported. Adjusted EBITDA margin in the year ago period was 10.5%. Adjusted EBITDA margin in the quarter they just reported, 13.8%. Love to see that type of margin expansion, and gross margin also expanded, as we saw earlier, by nearly an entire percentage point. Based on the revenue growth rates and EPS growth rates that Vitl Farms has, I would consider this stock to be slightly undervalued, and you could argue it's fair value. Let's check out the valuations. PE on a trailing basis is 28.6. PE on a forward basis is 23.0, and the PEG ratio for Vitl Farms is 0.65 as of today. That's trading at a similar PE to the S&P 500, a tiny bit higher, but those growth rates are way, way higher than the average stock in the S&P 500. And then the PEG ratio, not only is it below a 1, but it's less than half of the average stock inside the S&P 500. Vitl Farms is an absolute beast small cap that no one talks about, that I will be holding 100% of my shares and adding more shares here and there every time I feel like the stock has hit fair value or undervalued territory. I believe it's there right now. I believed it was there yesterday. All right, now let's move on to stock number 2. Stock number 2 is Upwk stock. The ticker on this is UPWK, and the market cap is about $2.33 billion. The stock after earnings is up 13.24%, up to $17.70. And like I said, that's roughly a $2.33 billion market cap. This is a very different company than Vitl Farms. Vitl Farms is small cap growth and small cap margin expansion. That's the story we've got with Vitl Farms. Upwk is small cap value. They definitely still have very impressive margin expansion, but it is not a hyper growth company. You'll see that when we look at the revenue growth rates. Not a hyper growth stock, definitely a value stock, okay? So if you're looking for small cap value, Upwk might be the way to go. If you're looking for small cap growth, Vitl Farms might be the way to go. Let's jump into it. Let's check out what happened inside this earnings report. Upwk beat on revenue estimates. They reported revenue of $201.7 million versus analyst estimates of $193.4 million, which is only 4.1% growth year over year, but that's a 4.3% beat from what analysts expected. That's what I'm saying when I'm talking about this is not a hyper growth company in terms of revenue, but in terms of EPS, very impressive growth and very impressive beat. 36 cents was reported, and the analysts expected 29 cents. So that's a 25.9% beat on adjusted EPS. Adjusted EBITDA, $59.63 million was reported in Q3. Analysts expected $50.12 million. That's a 29.6% margin and a 19% beat over analyst expectations. They also guided for revenue for Q4 2025 above analyst estimates, so they beat on that as well. They also raised their full year 2025 adjusted EPS guidance to $1.36, which is a 17.2% increase from the prior guidance. EBITDA for the full year is now expected to be $223.5 million, which is above the analyst estimates of $212.7 million. operating margin expanded from 10.7% in the year ago quarter up to 14.8% in this quarter. Free cash flow margin was flat year over year, 34.4%. Very impressive. If you don't know anything about Upwork's business model, they are a freelance marketplace, definitely one of the leaders in the space where you can go on if you're an individual or you're a company, and you can go on there and hire a freelancer to do some small work for you, or maybe even it's a big project, but you don't want to go out and hire that person and put them on your payroll as an employee, but rather they want to hire you as an independent contractor. And then Upwork just basically takes a cut of that deal for connecting the two parties together. Here's what the CEO of Upwork had to say about the quarter. The third quarter marked the start of the next chapter for Upwork. As we build the world's human and AI-powered workplace, we're driving phenomenal user productivity and engagement, resulting in a return to positive GSV growth. That's gross sales volume, okay? We are executing with speed and precision across our growth levers of AI, SMB, and enterprise, and are now on the path to a sustained multi-year growth story. Speaking of GSV, they had 2% GSV growth year over year, but GSV per active client was up 5% year over year. So that's trending in the right direction as we look forward to Q4 and beyond. Those two numbers need to be increasing each and every quarter. It's not the end of the world if they don't, because like we said, this is a small cap value stock. It's not necessarily a small cap growth stock, but if we want to really get the stock moving, increasing those revenue growth numbers is going to bring way more money to the bottom line. So we're going to see that EPS start to explode, and we know stocks follow earnings over the long term, so that can never be a bad thing for a company to be more profitable. From an operational standpoint, they really do have some great growth levers here that if they pull them in the right way at the right time, they could lead to very impressive revenue growth for Upwork moving forward, and that would really get this stock moving because they've already got the margin expansion. They've already got the crazy EPS growth, but if we start to see that revenue growth get up into the teens or even into the 20s, we would really start to see this stock get some crazy momentum behind it. Let's check out some operational highlights they've got. Their AI, which they call UMA, continued to evolve into an always-on work agent, further increasing customer engagement and productivity. They say UMA Proposal Writer provided a 15% uplift in UMA-generated proposals, and they launched an agentic talent sourcing solution for their Business Plus clients. This is important, reducing the median time to receive a high-quality talent shortlist for their jobs by more than 75%. Those efficiencies are very, very important. Gross sales volume from AI-related work accelerated by 53% year over year in Q3 of 2025, compared to 30% growth in Q2 of 2025. That is a major acceleration. Gross sales volume from generative AI work grew by 65% year over year in Q3 of 2025, and GSV from prompt engineering grew 71% year over year and 23% sequentially. And they say here the number of clients engaging in AI-related projects grew by 45% year over year in Q3 of 2025. That's what I'm saying when I say they've got some real growth levers here. If they pull them the right way and at the right time, this could lead to very, very impressive revenue growth. And this story would not only turn from a great margin story and a great profitability story, but also a revenue growth story. Again, if they could put that on their resume as well as a stock, man, we're going to see some real great momentum behind Upwork. And I told you earlier, this is a value stock, so we need to check out the valuation and make sure I'm not lying to you. Check out the trailing 12-month PE is below a 10. 9.07 is the trailing 12-month PE on a GAAP basis. The forward PE, as we look at full year 2025, 11.65. These are very, very impressive numbers. That is way below the S&P 500 with similar growth numbers in terms of revenue, maybe a little bit lower, but way higher EPS growth and very, very much better margin expansion. And check this out, the PEG ratio on a trailing 12-month basis is way below a 1 at a 0.04. Now that's what we call deep value territory right there. And since no investment decision is complete without a quick look at the balance sheet's looking pretty nice. Cash and cash equivalents of $634 million versus debt of $370 million. That is not bad at all. That's a very nice coverage ratio. I'd like to see that debt load come down if they could pay some of that off. I think that would be very good for them, bring those interest costs down over time, and increase that EPS even further. Now, real quick, before we wrap this video up, I actually want to talk about a third stock, a bonus stock that's also a small cap stock that I also hold that's also flying higher today. This has the lowest market cap of the three at about a 1.07 billion. The stock is First Watch Restaurant Group. That is ticker FWRG. If you've never eaten at First Watch before, if you have one near you, I would suggest you go. They serve breakfast, brunch, and lunch. That's it. It's the daytime diner. It's absolutely amazing food. I've never gotten anything I did not like there. Anyway, the stock is up 11% after their earnings they reported this morning. I want to go through some of the First Watch highlights for the Q3 report that they just reported. They had revenue of $316 million versus the analyst estimate of $310 million, which is a 25.6% year-over-year growth number and a nice beat of 1.9%. On EPS, they actually missed on EPS by 2 cents. They reported 5 cents of EPS, and analysts expected 7 cents of EPS. Adjusted EBITDA beat analyst estimates. 34.1 million was reported versus analyst estimate of 32.52 million. That's a 10.8% margin and nearly a 5% beat. They raised adjusted EBITDA for the full year. They had operating margin of 3.2%, which was the same as a year ago. They increased their locations from 547 all the way to 620. And then one of the main things that moved the stock up, even though they had an EPS miss, was actually that same-store sales rose by 7.1% year over year in comparison to negative 1.9% in the same quarter of last year. So Q3 of 2024, they had same-store sales down by 1.9%. That put a lot of downward pressure on the stock. If you're interested in a turnaround stock that's a small cap, First Watch might be the stock for you. If you want a small cap value stock, consider looking into Upwk. And then if you want a small cap growth stock, consider looking into Vitl Farms. All three of these have very easy to wrap your head around business models. I love a business model that's not so complex that the regular person has to spend hours and hours and hours understanding how that company makes money. All three of these companies, it's extremely easy how they make money. That's why I want to talk about these type of stocks on YouTube. It doesn't always have to be some crazy, very, very technological stock like AMD, where you got to wrap your head around these new chips that they're making and how does that compare to NVIDIA or whatever the case may be, or even a stock like Palantir that I talk about all the time. That's harder to wrap your head around than something like a butter and egg company or a restaurant stock or a freelancer network, okay? Let me know what you think about these three stocks in the comments below, and do you own any of these three stocks? If you do, congrats on a great day with these specific names. Even though the entire market was down, we at least had these three stocks popping way higher because they had absolutely amazing earnings. Looking forward to seeing your comments in the comment section below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. So let me know what you think in the comments. I'm looking forward to that. Thank you so much for stopping by. Have a great day.